Donald Trump intends to impose 25% tariffs on the imports from Mexico and Canada, 20% total tariff burdens on the Chinese goods, 25% surcharges on oil, steel, and aluminum imports, and 25% on the trade with the European Union. Americans ready to share his fears. If all of the US president's tariff plans take effect, prices in the country will rise, and the economy is likely to slow down. Even the previously stable US labor market has already felt the initial impact of the White House's staffing reforms. Let's take a look at other macroeconomic indicators. You are watching Traders Calendar on March 5th. According to reports, US oil inventories are no longer following Trump's directives. After 5 weeks of growth, they dropped by 0.64 million barrels. It's the first decline since mid-January. The market had expected an increase instead of a slump. And this makes Thursday's report unpredictable, as it could go either way. Oil prices will also react to Australia's GDP data. The Australian dollar often mirrors the movements of crude oil in the Asia-Pacific region. If the country's economy expands at around 1.3%, the Australian dollar will strengthen, supporting benchmark oil prices. China's business activity data could have a similar effect. The services PMI is expected to rise to 51.2 points, as China's oil demand remains a crucial market driver. Other major economies will also release their services activity reports, although in Germany and the Eurozone the indicator remains above the critical 50-point mark. Forecasts suggest a slight decline. In February, the indicator is expected to stay at 52.2 points. The Eurozone's services sector could contract for the third consecutive month from 51.3 points to 50.7. If the data confirms decline in activity, the euro will face additional pressure from the US dollar. The first week of March will end with the publication of the key US labor market report. On Wednesday, the United States will disclose its NONFARM employment change data. Job growth is expected to reach 183,000 in January, surpassing the December figure and the forecast of 176,000. In this light, the greenback will gain value. However, the dollar's rally may be short-lived. The US services PMI from the S&P Global is expected to drop to 49.7 points, falling below the critical 50-point threshold. If confirmed, this could be a negative factor for the dollar. Meanwhile, the ISM report appears more optimistic. The index is expected to rise to 53 points in February. If confirmed, the dollar could find support from signs of a recovery in the services sector. Later in the day, official United States oil inventory data will be released. The data exceeded forecast in the previous period. Please note that the time of all above mentioned publications is set in a GMT +3. The next video review of Traders Calendar will be released on a Wednesday, March 5th. And now, we wish you profitable trading and see you soon.